London's housing market is not just expensive anymore, it's unstable. And the most dangerous part is that almost nobody wants to say that out loud. For years, people were told London was different, that prices only go one way, that demand will always protect the market, that even if things get hard, London will hold. That story is starting to fall apart. Quietly, slowly, but very clearly. Rents are hitting levels that no longer make sense. Mortgages are resetting at prices people can't afford. Sales are stalling, not because homes are cheap, but because buyers are scared. And beneath all of that, something deeper is breaking. The deal London used to offer. Work hard, live small, but move forward. That deal is gone for renters. And it's disappearing for homeowners too. Here's what makes this moment different. This isn't just about prices being high. London has always been expensive. This is about prices becoming detached from reality. Detached from wages, detached from stability, detached from what normal life can support. If you rent, you already feel it. If you own, you're starting to. People renewing mortgages are seeing payments jump by hundreds, sometimes thousands a month. Not because they borrowed recklessly, but because the system changed under their feet. People who thought they were safe are now doing the maths again, and not liking what they see. At the same time, renters are being squeezed harder than ever. Competition is brutal. Viewings feel like auctions. Quality doesn't matter anymore, just speed and money. And here's the part no one likes to talk about. When renters can't cope, they leave. When homeowners can't cope, they sell. And when both start pulling back at the same time, markets don't stay stable. They freeze. London is showing early signs of that freeze. Transactions slowing, development stalling, confidence cracking. But the real damage doesn't show up in charts first. It shows up in behavior. People delaying moves, people staying in bad housing, people quietly planning exits. And when that starts happening at scale, cities change fast. London runs on people who aren't rich. Teachers, nurses, drivers, builders, office workers. When those people can't live near their work, the city doesn't just get expensive, it stops working properly. Hospitals struggle, schools struggle, commutes explode. This is not some future problem, it's happening now. And the reason you don't hear it described as a breaking point is simple. Admitting London's housing market is breaking scares everyone. Politicians don't want it. Banks don't want it. Homeowners don't want it. Investors don't want it. Because once people accept that London isn't immune, everything changes. So instead, the story stays soft. Cooling, adjusting, normalizing. But what if that's not what this is? What if London isn't adjusting, but cracking? That's what this video is about. Not panic, not hype, just looking clearly at what's happening. To renters, to homeowners, and to the city itself. Because once you see the full picture, it becomes very hard to unsee it. When people talk about London's housing market, they usually talk about numbers, average prices, monthly rents, interest rates. But numbers don't tell you how a market feels when it starts to break. And right now, London doesn't feel healthy. It feels tense. You can hear it in conversations people have quietly, not online arguments, real ones, at work, with friends, in families. People who own homes are saying things they never used to say. People who rent are asking questions they never thought they'd have to ask. Questions like, how long can I really keep this up? Or, what happens when my mortgage resets? Or, is staying in London still worth it? Those questions didn't used to exist at this scale. For years, London worked because the pain felt temporary and the reward felt real. You accepted small flats, long commutes, and high costs because you believed it led somewhere. But what happens when that belief fades? That's what this video is about. Not whether London is still expensive, everyone knows that, but whether London's housing market still functions the way people think it does. Because something important has shifted. This time, it's not just renters being pushed to the edge, it's homeowners feeling trapped. It's buyers stepping back. It's sellers hesitating. And when all of those things happen at once, markets don't glide into a soft landing. They lock up. What makes this even harder to talk about is that no one wants to be the first to say it. Homeowners don't want to hear that prices might stop rising. Renters don't want to hear that relief isn't coming soon. Banks don't want fear. Politicians don't want panic. So the language stays careful, cooling, stabilizing, normal market movement. But those words don't match what people are actually experiencing. This video isn't here to scare anyone, and it's not here to predict a crash on a specific date. It's here to explain why London feels stuck in a place where no option feels good anymore. Why renting feels like a dead end. Why owning feels riskier than it should. Why moving feels harder. And why staying feels heavier. We're going to look at this from both sides. From renters who are being squeezed harder than ever, and from homeowners who are realizing the safety they relied on isn't as solid as it once felt. We'll look at how London got here, what's quietly changing, and why this moment matters not just for property prices, but for the city itself. Because housing isn't just about buildings. It's about whether a city still works for the people who live in it. And right now, London is sending signals that something fundamental is no longer lining up the way it used to. Once you see those signals clearly, it becomes much easier to understand why so many people feel uneasy, even if they can't quite explain why yet. Let's break it down. To understand why London's housing market feels so uneasy right now, you have to stop thinking in terms of headlines and start looking at how people are actually behaving. Markets don't break all at once. They drift, then they stall. That's what London is doing. For years, rising prices covered up a lot of problems. If prices kept going up, people assumed everything was fine. But price growth doesn't mean stability. It just means demand is winning for now. What stability really looks like is movement. People selling because they want to. People buying because they can. People renting because it fits their stage of life, not because they're stuck. That movement is slowing in London. And when movement slows across renters, buyers, and sellers at the same time, something deeper is going on. Let's start with rent, because that's where pressure shows up first. London rents have jumped at a pace that has nothing to do with normal wage growth. In many cases, people are paying hundreds more per month than they were just a few years ago, for the same space or worse. This isn't because London suddenly became more valuable overnight. It's because supply stayed tight, while demand surged back faster than expected. But here's the problem. Wages didn't surge with it. Most people didn't suddenly start earning hundreds more per month. So rent increases didn't come out of extra income. They came out of everything else. Savings, spending, quality of life. People adjusted by cutting back, sharing longer, or moving further out. But there's a limit to how much you can stretch. And that limit is being reached. Now look at prices. On paper, London house prices look like they're holding up, but that's misleading. Prices aren't rising because people feel confident. They're holding because sellers don't want to accept less and buyers can't afford more. That creates a standoff. Homeowners who bought years ago don't feel pressure to sell unless they have to. Many would rather wait than accept a lower price. Buyers, especially first-time buyers, are facing higher interest rates that completely change what they can borrow. So even if prices don't crash, the market freezes. Fewer transactions, longer listings, more hesitation. This is why looking only at prices misses the point. A market can be expensive and unstable at the same time. Interest rates are the key piece most people underestimate. For a long time, low rates made high prices feel manageable. Monthly payments stayed within reach, even as prices climbed. That illusion is gone. When mortgages reset at higher rates, the monthly cost jumps fast. People who were comfortable suddenly aren't. This doesn't mean everyone defaults. It means people pull back. They stop moving, they delay upgrades, they avoid risk. And when enough people do that, the entire system slows. Wages are the final piece that makes this unstable. London used to justify high costs with high opportunity, but wage growth has been weak for years. Some sectors did well, many didn't. So now you have a city where housing costs behave like a global market, but wages behave like a local one. That gap creates constant pressure. It means renters are one increase away from moving. It means homeowners are one rate change away from stress. It means buyers can't stretch anymore. When people can't stretch, markets stop expanding. And that's where London is right now. Another sign of instability is how cautious everyone has become. Agents are careful with language, banks are stricter, buyers ask more questions, confidence hasn't collapsed, but it's cracked. And confidence is everything in housing. People don't buy homes just because they need them. They buy because they believe the future will be manageable. Right now, that belief is shaky. That's why you're seeing a rise in wait-and-see behavior. Renters waiting to move, owners waiting to sell, buyers waiting for clarity. Waiting feels safe. But when everyone waits, markets lock up. This is why London's housing market doesn't feel like it's adjusting smoothly. It feels stuck, not collapsing, not recovering, just stuck. And that's a dangerous place for a market to sit for too long. Because pressure doesn't disappear when movement stops, it builds. Renters keep paying high rents, owners keep facing higher costs, services feel the strain. And all of that feeds into the next stage of the breakdown, where people don't just wait, they leave. That's what we'll look at next, as we break down how renters and homeowners are being hit in different ways by the same unstable system. When people talk about London's housing problems, they often split the conversation into two camps. Renters on one side, homeowners on the other. And for a long time, it felt like those two groups were living in completely different worlds. Renters were struggling, homeowners were doing fine. That gap is closing. Not because renters are suddenly better off, but because homeowners are starting to feel the same pressure, just in a different form. Let's start with renters, because they still hit the wall first. Renting in London used to be expensive but flexible. You paid more, but you could move. You could adjust, you could change areas or share if needed. That flexibility is disappearing. Rents are rising so fast that many people are being priced out of their own neighborhoods overnight. A renewal letter comes through, and suddenly the place you lived in for years is no longer affordable. There's no negotiation, no real alternatives nearby, and no safety net. People scramble. They search further out. They accept smaller places. They move in with friends. They commute longer. And each move chips away at stability. What makes this worse is competition. Viewings feel like interviews, sometimes auctions. People offer above asking rent just to secure a place. Quality barely matters anymore. Damp, poor insulation, old fittings, people accept it because the alternative is nothing. This creates a constant state of stress. Renters don't know where they'll be living next year, or even next month. Planning becomes impossible. Now look at homeowners. For years, homeowners were told they were safe, that owning property in London was the ultimate security. And for a long time, that was true. Low interest rates made mortgages manageable. Rising prices created confidence. Even if things were tight, people felt protected by value. That protection is weakening. The biggest shock has come from mortgage resets. People who fixed at low rates are now facing renewals that look nothing like what they signed up for. Monthly payments jump sharply, even if the loan size hasn't changed. For some households, the increase is manageable but painful. For others, it's genuinely frightening. This isn't about reckless borrowing. It's about a system that changed fast. Homeowners who planned carefully are now redoing budgets, cutting spending, and delaying life decisions. Upgrading becomes impossible. Moving closer to work is off the table. Starting a family feels riskier. And just like renters, homeowners feel stuck. Selling doesn't feel like a win. Staying doesn't feel safe. That's new. Another pressure homeowners face is uncertainty. For years, property was treated as a one-way bet. Prices might slow, but they'd recover. Now that confidence isn't guaranteed. People don't want to sell into a weak market, but they also don't want to carry rising costs forever. So they wait. And that waiting feeds into the wider freeze. This is where the two sides start to look surprisingly similar. Renters wait because they can't afford to move. Owners wait because they can't afford to move. Different reasons, same result. Both groups delay, both feel trapped, both lose flexibility, and when flexibility disappears, pressure builds. Another shared problem is space. Renters are often living in smaller, more crowded conditions than they planned for. Homeowners are stuck in homes that no longer fit their needs. People can't upsize, they can't downsize, they can't relocate easily. So households adapt in ways that strain daily life. Working from cramped spaces, longer commutes, less privacy. These aren't dramatic failures, they're slow drains, and they affect mental health, family life, and productivity. One of the most damaging myths in this situation is that homeowners benefit from high prices while renters lose. That's only partly true. Rising prices only help homeowners if they can actually use that value. If you can't move without paying more, if you can't borrow safely against it, if selling just pushes you into the same expensive market, then paper wealth doesn't feel like wealth at all. It feels like a trap. This is why the tension between renters and homeowners is often misdirected. They're not enemies. They're both reacting to the same broken incentives. A system that rewards holding property but punishes movement. A system that values scarcity over stability. Another shared pressure is fear of the future. Renters fear endless increases. Homeowners fear rate changes. Both fear that one unexpected shock could push them over the edge. That fear shapes behavior. People save more, they spend less, they take fewer risks, and when millions of people do that at once, the economy feels it. Local businesses struggle, services face cuts, opportunities shrink, housing pressure doesn't stay contained, it spreads. There's also a social cost to this divide. Renters feel disposable, homeowners feel blamed. That resentment distracts from the real issue. The issue isn't who owns what. It's whether the housing system allows normal life to function. Right now, it doesn't. A healthy system lets people move as their lives change. Graduate to renter, renter to owner, owner to something that fits later life. London's system blocks those transitions. People get stuck in stages they've outgrown. That's why frustration is so widespread, and it's why this breakdown feels so personal to so many people. Because housing isn't abstract. It's where you sleep, where you raise kids, where you recover from work. When that foundation feels shaky, everything else feels harder. Another thing renters and homeowners now share is exit thinking. Renters think about leaving London to find stability. Homeowners think about selling and relocating before things get worse. Not everyone leaves, but more people consider it. And that's a signal. Cities thrive when people want to stay, when they see a future there. When the dominant question becomes, how long can I cope? Something has gone wrong. This is why it's misleading to say that renters and homeowners are experiencing separate crises. They're not. They're experiencing the same one from different angles. One side feels the pressure immediately. The other feels it with a delay. But both are being squeezed by a market that no longer supports movement, stability, or confidence. And when both sides start pulling back at the same time, the consequences reach far beyond housing. That's when the quiet freeze begins. A freeze where people stop acting not because they want to, but because no option feels safe. And that's the stage London is entering now. Next, we'll look at what happens when that freeze spreads, and why it's one of the most dangerous phases a housing market can enter. Housing markets don't usually fail in loud, dramatic ways. They don't collapse overnight. They don't announce themselves. They don't ring alarm bells. Most of the time, they freeze. And a frozen market is often more damaging than a fast crash, because it traps people in place while pressure keeps building underneath. That's where London is heading now. The quiet freeze starts with hesitation. Buyers hesitate first, not because they don't want homes, but because the risk suddenly feels too high. When interest rates rise, borrowing power drops fast. Monthly payments jump. The margin for error disappears. So buyers pause, they ask more questions, they run the numbers again, they wait for clarity. That clarity rarely comes. Instead, uncertainty lingers. People worry about overpaying. They worry about buying just before prices soften. They worry about being stuck with a mortgage that feels heavy for decades. So they step back, not forever, just for now. But when thousands of people step back at the same time, demand weakens even if prices don't fall. Then sellers hesitate. Sellers look at the market and don't like what they see. They remember higher prices. They hear stories of slow sales. They don't want to accept less than what their neighbor got last year, so they wait. If they don't have to sell, they won't. They stay put, they delay moves, they hold on. This creates a standoff. Buyers want lower prices or more certainty. Sellers want yesterday's value. Neither side moves, and when neither side moves, transactions dry up. This is exactly what a freeze looks like. Low volume, longer listings, quiet anxiety. On the surface, it looks calm, but under the surface, pressure keeps building. Because life doesn't pause just because the market does. People still lose jobs, people still separate, people still have children, people still get sick, and eventually, some people don't get to choose whether they sell. That's where forced sales start creeping in. Forced sales don't arrive all at once, they arrive quietly. a household whose mortgage resets and becomes unmanageable, an investor whose rental no longer covers costs, a family dealing with a shock they didn't plan for. At first, it's isolated cases. One sale here, another there. They don't show up as a crash, they show up as stress. And because no one wants panic, these sales are often described gently. Motivated seller, price to move, quick sale required. But behind the language is the same reality. Someone needs to sell, even if the timing is bad. This is where the freeze becomes dangerous. Because forced sellers don't want to sell into a weak market, but they don't get a choice. And buyers already cautious sense that weakness. So they push harder. They offer less. They wait for better deals. That puts more pressure on sellers. And slowly the balance shifts, not through a dramatic crash, but through exhaustion. Another sign of the freeze is what isn't happening. Upgrading slows. People who wanted to move to larger homes stay where they are. Families squeeze into spaces that no longer fit. Downsizing slows. Older homeowners stay in properties larger than they need, not because they want to, but because moving feels risky and expensive. This blocks supply at both ends. Homes don't circulate. New buyers can't enter. Chains collapse. The market clogs. This hurts everyone, even those who aren't moving. Because when housing stops moving, everything connected to it slows too. Construction delays, renovations pause, local trades feel the drop. The freeze spreads outward. Another part of the quiet freeze is emotional. People stop trusting the system. Not in a loud, angry way, but in a tired one. They stop believing that doing the right thing leads to a good outcome. They feel punished for acting responsibly. They feel nervous about making any big decision. This leads to paralysis. People put off moving for jobs. They turn down opportunities. They settle for less than they hoped. Cities feel this deeply. London depends on movement. New people arriving, others moving on. Skills flowing. When that movement slows, the city stiffens. Opportunity becomes harder to access. Inequality deepens. Networks close. Another quiet sign of the freeze is how language changes. Optimism disappears. Estate agents stop talking about growth and start talking about realistic pricing. Developers delay projects quietly. Lenders tighten criteria. No one rings alarms, but everyone adjusts. That adjustment signals a shift from expansion to caution. And once a market enters that phase, it's hard to reverse quickly. Because confidence doesn't return on command. It returns when people believe the future is manageable again. Right now, that belief is fragile. Renters don't believe rents will stabilize. Buyers don't believe prices are safe. Owners don't believe costs will ease. So everyone protects themselves. That collective self-protection is rational, but destructive. It turns a housing system into a holding pattern, and holding patterns don't last forever. They either resolve through recovery or through correction. The longer the freeze lasts, the more pressure builds. Savings drain. Costs rise. Patience wears thin. Eventually, more people are forced to act. That's when freezes turn into something else. Not because of panic, but because of necessity. This is why the current moment matters so much. London isn't crashing, but it isn't healing either. It's stuck in a dangerous middle ground where confidence has cracked but not collapsed. And history shows that this stage is often the most unstable, because it looks calm until it isn't. The quiet freeze doesn't make headlines, but it reshapes cities. And once it sets in, the damage spreads slowly, silently, and deeply. Next, we need to look at what this freeze does to London beyond housing, to work, services, and daily life, because that's where the real cost shows up. When housing pressure reaches a certain point, it stops being a market issue and becomes a citywide problem. Because cities don't just run on buildings and money, they run on people. People who show up every day, people who keep things moving, people who do jobs that don't come with huge salaries, but without which nothing works. When those people can't afford to live near where they work, the city starts to strain. London is already there. The first sign is workers leaving. Not all at once, not dramatically, quietly. People finish a contract and don't renew. They take a job elsewhere. They move out temporarily and never come back. At first, this doesn't feel like a crisis. There are always new people arriving. There's always someone else to fill a role. But over time, the exits add up. Hospitals start struggling to fill shifts. Schools rely more on temporary staff. Care homes rotate workers constantly. These aren't abstract problems. They affect waiting times. they affect service quality, they affect safety. And the root cause often comes back to the same thing. Housing. A nurse can't justify paying half their income on rent. A teacher can't manage a 2-hour commute forever. A care worker can't survive on unstable housing. So they leave. London doesn't collapse when one worker leaves. It weakens when thousands do. The second sign is service failure. Councils and public services are already stretched. Housing pressure makes it worse. When rents rise, councils spend more on temporary accommodation. When homelessness increases, support systems strain. When workers leave, overtime and agency costs rise. Budgets that were already tight become impossible, so councils cut where they can. Libraries close, maintenance slows, youth services disappear. Each cut feels small on its own. Together, they change daily life. Streets feel less cared for. Support feels harder to reach. Trust in local systems erodes. And once trust erodes, communities weaken. People stop feeling looked after, they stop engaging, they pull back. The third sign is commuting. Long commutes aren't just inconvenient, they're damaging. As housing near workplaces becomes unaffordable, people move further and further out. An extra 20 minutes becomes an hour becomes 2. At first, people cope. They listen to podcasts, they adjust routines, they tell themselves it's temporary, but long commutes drain energy, they eat into family time, they increase stress, they reduce sleep. Over time, they lead to burnout. Burnt-out workers don't stay. They change jobs, they change cities, they leave sectors entirely. This is why housing pressure doesn't stay contained. It reshapes labor markets. Jobs that rely on physical presence suffer first. Healthcare, education, transport, retail. These jobs can't be done remotely. And they don't always pay enough to absorb housing costs. When those sectors struggle, everyone feels it. Longer waits, reduced services, higher prices. Another social cost is how communities change. When people move frequently, it's harder to build connections. Neighbors don't know each other. Local shops lose regulars. Schools deal with constant turnover. Communities become temporary. That weakens social ties. And strong social ties are what help cities cope during hard times. Housing pressure erodes that resilience. There's also a generational cost. Young people delay settling down. Families delay having children. Older residents stay put because moving feels risky. This skews city life. Schools shrink in some areas. Healthcare demand rises in others. Planning becomes harder. A city works best when people can move through life stages naturally. London's housing pressure blocks that flow. Another quiet impact is on mental health. Constant housing stress weighs on people. The fear of rent increases, the fear of eviction, the fear of mortgage shocks. These fears don't switch off when people get home. They linger. They affect sleep. They affect relationships. They affect performance at work. When millions of people carry that stress, it becomes a public health issue. But because it's slow and spread out, it's easy to ignore. Another cost shows up in inequality. Housing pressure sorts people. Those with support stay closer in, those without move further out or leave. Over time, cities become more divided, not just by income, but by access. Access to jobs, access to services, access to time. That division feeds resentment, and resentment feeds instability. Cities function best when people feel they belong. Housing pressure tells many people they don't. Perhaps the most dangerous effect is how normal all of this starts to feel. Long commutes become expected. Crowded living becomes normal. Service cuts become routine. People adapt. But adaptation isn't the same as health. Cities can survive under pressure for a long time, but survival isn't success. And London is starting to feel like a city that's surviving rather than thriving. That shift matters, because cities that stop working for ordinary people lose something essential. They lose trust. Trust that effort leads somewhere. Trust that the city will support you if you commit to it. When that trust fades, people stop investing emotionally. They stop caring as much, and that changes everything. This is why housing pressure is so dangerous. It doesn't just affect where people live. It affects how they live, how they work, how they relate to each other, how they see the future. And once those things start to break down, fixing the housing market alone isn't enough, because the damage has already spread. London is not broken beyond repair, but it is being quietly worn down. And if housing pressure continues unchecked, the city risks becoming something very different from what it once promised. A place people pass through rather than build lives in. That's the real cost of an unstable housing system. And it's already being paid every single day. London has always been ahead of the rest of the UK. Not just culturally or economically, but structurally. What happens in London rarely stays in London. Housing pressure shows up there first. Then it spreads outward, city by city, year by year. That's why what's happening now matters far beyond the capital. London is not an exception anymore, it's a signal. If you want to understand where the UK's housing system is heading, you don't look at forecasts. You look at London's present, because the same pattern repeats every time. First, demand rises faster than supply, then prices climb beyond wages. Then movement slows, then confidence cracks. Then people adapt by leaving. We've already seen this play out. It happened in London first, then it reached cities like Manchester, Bristol, and Brighton. Then it spread into commuter towns. Now it's reaching places that once felt affordable and safe. The mistake people make is thinking this is just growth. It's not. Growth adds opportunity. Pressure removes choice. And the UK is moving from one to the other. History is clear on this. Cities that allow housing to drift out of reach don't suddenly recover on their own. They don't self-correct quickly. They harden. Prices become sticky. Rents reset higher. Expectations shift downward. People adjust their lives around the pressure. And once that adjustment happens, the system locks in. That's why waiting for things to go back rarely works. Because once housing becomes scarce enough, it changes behavior permanently. London shows what that looks like. People no longer assume they'll move up the ladder. They no longer assume they'll stay long-term. They no longer assume effort will be rewarded with stability. That mindset is already spreading. You can hear it in other cities now. People say things like, "It's getting London prices without London pay," or "This used to be affordable, but not anymore," or "I'll stay for now, but I'm not sure long-term." Those are the same sentences Londoners were saying years ago. That's the warning. Another lesson London offers is about timing. The biggest damage doesn't happen at the peak. It happens during the long, quiet middle. The phase where prices don't crash, but life keeps getting harder. That's the phase where people lose trust, and trust is the hardest thing to rebuild. Once people believe a city won't work for them, it doesn't matter how many jobs it creates or how much investment arrives. They'll plan their exit anyway. This is why focusing only on whether prices rise or fall misses the point. The real question is whether cities remain livable, whether ordinary life still works, whether people feel they can stay without sacrificing everything else. London is telling us what happens when the answer becomes no for too many people at once. It becomes a city that functions, but at a cost paid in long commutes, in stretched services, in burned-out workers, in broken expectations. And once that cost becomes normal, it spreads. Other cities copy the pattern, even if they don't mean to. They attract demand without building enough homes. They protect prices instead of people. They delay hard decisions. By the time they realize the damage, it's already embedded. That's why London matters so much in this conversation. Not because it's special, but because it's first. The UK now faces a choice, whether it wants to admit it or not. It can treat London as a warning and change direction. Or it can treat London as normal and let the same pressures roll outward, city by city, until unlivable becomes a common experience rather than an exception. Ignoring the warning doesn't stop the process, it just delays the response. And delay always has a cost. What makes this moment different is how many people are affected at once. This isn't a fringe issue anymore. It's not just about young renters. It's not just about first-time buyers. It's about homeowners feeling trapped. It's about workers leaving essential jobs. It's about cities struggling to function normally. That scale matters. Because systems don't change when a few people complain. They change when large numbers quietly lose faith, and that quiet loss of faith is already happening. The danger isn't panic. The danger is resignation. People accepting that things will just keep getting worse and planning their lives around that belief. When that happens, ambition shrinks, engagement shrinks, commitment shrinks. Cities become places you endure, not places you build a future in. London is not collapsing, but it is hollowing out. And hollowing out doesn't grab headlines the way crashes do. It just leaves a city weaker, less fair, and more divided over time. That's the real lesson London is offering the rest of the UK right now. Not that disaster is guaranteed, but that ignoring pressure always leads somewhere, and it's rarely somewhere good. Understanding that matters, because housing isn't just a market, it's the base layer of everyday life. When that layer becomes unstable, everything built on top of it feels shaky too. Work, family, community, future plans. London is showing us what happens when that base layer cracks but doesn't fully break. And that's why this conversation matters now, not later. Not after a crash, not after things settle, now. Because once people stop believing cities will work for them, winning that belief back is incredibly hard. If you want to understand where this leads next, subscribe.